Good afternoon, everyone. I'd like to welcome you all to the Halftime Talk feature interview series. I'm delighted today to be joined by Arjun Murti, who is partner at Veriten. Thanks, Arjun, for joining us today.
Yeah, it's always a pleasure to be here. Thank you for having me back.
Great to have you. Well, let's get your perspective. We talked to you a few months ago, more than 6 months ago to a year, and a lot has happened, obviously, in the energy markets in general, and a lot of, playing dynamics still going on, not least of which is geopolitics, and Trump being elected. So quite a few dynamics there that have perhaps changed the picture. But maybe not. It's been a volatile year, hasn't it? But even just let's start looking at the oil price, the outlook for that going forward. But to help us with that, maybe taking a step back and looking at the last 6 to 9 months, you know, the oil price being relatively stable with a lot of management in that. Do you expect that we'll continue and the global economy obviously doing its thing? What's your outlook for 2025, even the first half, given where we are today at the end of 2024 from a global economy oil demand point of view?
Diallo, we have, especially during the height of Russia-Ukraine, we've resisted kind of calling it a super cycle for oil. We have used the term super volatility with the basic idea that we're in a period of sluggish global GDP growth and kind of the most important commodities driver, China, in some version of a slowdown, either due to demographics or their export and property market-oriented economy slowing, and with maybe a little touch of transition attached to that, the move to EVs and LNG trucks there. And in that kind of environment, where we also have shale oil continuing to grind higher, Guyana, Brazil, Canada, et cetera, we didn't think it was time to call for a super cycle yet, but we have used the phrase super volatility. You correctly note that the last year has been a calmer period, but perhaps going forward with some of these uncertainties still unresolved about the health of China, about the pace of shale growth, I think we should expect a widening range of oil prices, potentially to the downside, but also to the upside, with all the uncertainties around tariffs and economic health and so forth, as well as OPEC production out there. And so we're sticking with our super volatility theme for oil markets.
Okay, and I guess you have every justification to do so. Well, let's talk a bit about one of those new elements, which is Trump. Trump is now going to be in administration from January. We've seen him there before. So, any surprises? Should we expect any surprises from a US energy domestic policy, from an international point of view? What would be your top three tips of what we might see coming from Trump this time that either we didn't see last time or would be a huge turnaround from what Biden has produced?
I think the topic of energy transition and, quote, addressing climate change has become a much bigger issue over the last 4 years than it was, especially at the start of Trump 1 in 2016, 2017. And part of the reason I write this weekly blog called Super Spiked has been to address what we've called a messy energy transition. And there's a lot of framings around energy transition that we've pushed back on. The idea that somehow we can very quickly shift from fossil fuels only into new stuff, presumably renewables, over a very short, and all of those narratives, I think that is where we're most hopeful that we will get a positive change from a narrative around coming from the Trump administration, especially the new energy secretary, Chris Wright, that goes back to prioritizing availability, abundance, reliability, geopolitical security as the tenets of why we use energy and what American energy policy should be grounded on. It's not that climate and the environment don't matter, they're critically important, but we've been upside down in the last 4 years trying to address climate change without first and foremost ensuring that abundance and reliability are there. And I think that'll be the biggest change in sort of tone and narrative that we'll see coming from this new administration.
Okay, but I mean, fair enough. But short term, if we look at the abundance, if you like, and reliability, yes, we have all the uncertainties of geopolitics, etc. But at the moment, we're facing, a bit of an oil glut, if you like, plenty of supply because of low demand, obviously, but also OPEC is holding back some of that supply, so there's even more that could come forward. And US shale, I mean, you mentioned that. Would you expect us to be seeing more US production beyond the 13 million barrel a day figure because of policy, or has that reached its threshold anyway because of the internal dynamics of some of those companies?
Trump is probably most famous for his drill, baby, drill phraseology, which tends to, by the nature of that phrase, emphasize oil and gas production. And, we've shown that over the last decade, frankly, over the last 50 years, it has not mattered which president's party is in power. The macro trends and the geology has mattered much more than any specific policy coming from any administration, left or right, or anyone in between. I think what's missed here is often it's really not oil and gas that is the issue in the United States right now. It's going to be electricity and power markets. And frankly, we've heard far less front and center narrative from the Trump administration about how to address our challenges with an aging grid, growing intermittency, newfound demand growth from data centers and so forth. And what is the power markets plan that comes from the federal government? This is also a state by state issue. I think that part of it is going to be more important to the presidency going forward and its ability to be successful or not. And I think we need to hear more about what their plans are on that front than the sort of drill, baby, drill rhetoric we've been hearing.
Well, I mean, is the IRA bill part of that power solution? I know that's many things. It's funding towards clean tech and clean energy, but it is addressing a lot of the future power, independence, if you like, of the states as well. Where's the sort of mood of where Trump might go with that bill? Some argue that actually it would be favorable to his own policy, make America great again, independence, etc., his isolationist sort of policy, to retain that investment inwards, to build that independence from the CHIPS Act, etc. Do you think that's also sort of vulnerable?
I think we would like to see the IRA reformed rather than repealed. And I think if Trump has been about make America great again, reshoring our industries, that clearly is a component of the IRA bill. I think where the IRA could go off track is where it prioritizes the climate narratives and addressing emissions over, first and foremost, ensuring power and energy is abundant, available, reliable, and secure. And how can we reform the IRA to retain some of the motivations to reshore domestic industries for new energies in particular, while perhaps getting rid of some of the mandates and let's just call it government-chosen technology winners, which is an aspect of this bill. It's not the entirety. How do you reform that? Trump administration will use the term energy dominance, and it's often used to be associated with oil and LNG. And we are, of course, America, a dominant oil producer and LNG exporter. Our view is that that should also include new energies and all that comes with it. We should want to be leaders in nuclear, geothermal, solar, and some of the criticals, minerals, refining, mining, and processing that is needed. And is currently, we're very dependent on China as a world and as a country for the development of some of these new technologies. Those aspects of the IRA that motivate that general idea that we should be as strong in new energies as we are in traditional oil and gas, that's the part of the IRA, or at least the spirit of the IRA, we hope will persist. And I don't want to say we have optimism on any specific policy narrative, but I think there's a lot of themes there that are consistent with what the Trump administration talks about.
Okay. I mean, you mentioned China in terms of its progress on that front. Is sort of making great progress on battery and solar and EVs and other things. Let's talk a bit about the China US relationship. There's a tariff sort of dynamic that we saw play out last time under Trump. He's saying he's going to do more on that front in terms of slapping on more tariffs. We talked to someone earlier this week who said China's more prepared this time, ready. It's been kind of planning economically for that onslaught, if you like. And of course, China has its own cards, doesn't it? It holds its own cards with minerals and the things that it could bring to the table. Is your feeling that we're going to see the same approach by Trump, despite what he said, or could he take on a different tack towards China this time around?
I think
from a point of view of protecting U.S. industry.
I think there's a lot of uncertainty in how all of that is going to play out. China might be better prepared for a Trump 2, but I suspect Trump has learned a lot from his first go around as president and how to affect the levers of government and so forth. He, of course, had no government experience prior to winning the presidency in 2016. So I think there's a lot to be determined. I will say that unlike, I guess it was 8 years ago, the US has gone from being a major oil importer to now a modest oil exporter, oil and refined products, and an even larger one if you include Canada. And LNG was almost zero in LNG exports in
Yeah.
2015, and now we're the #1 LNG exporter. So at least from an energy security standpoint, America is in a much better position. I think the sort of debate and discussion around China versus India, it frankly probably has bigger implications for the rest of the world. What does this mean for Europe? What does this mean for developing Asia, who might be caught in between? Let's just call it this new sort of major powers. I don't want to call it a conflict, but at least lack of friendliness at the moment. So.
Okay. Yeah, I mean, it's certainly a dynamic that's going to play out, and a lot has changed in that time. Arjun, I want to touch a bit on what you said at the beginning about sort of super volatility, because that obviously has a big impact on, CapEx investment in oil and gas, of which we continue to see. There has been some press recently on new offshore drilling, and it kind of more an impetus towards that. But again, oil price volatility tends to make corporates hesitate to make big expenditure plans and commitments. How much of that do you think will still hold big companies back from their capex and E&P?
I think there's volatility in a number of fronts. One is the pace of oil demand growth. Forget about energy transition, just the uncertainty on China slowing and macroeconomic conditions. And there is an uncertainty on how much longer can shale, I'm going to say, can it continue to grind higher, 1 to 300,000 barrels a day and so forth. And I think the uncertainty on that, the uncertainty on these things like whether it's tariffs or how the world economic order is being reordered, uncertainty on the pace of transition. We're of the view that there is no decade, let alone year, where anyone can know when oil or gas demand is going to peak. I might have that view, but there's no question we're in a more sluggish period for macroeconomic conditions and therefore oil demand to begin with. All of that does not speak to companies wanting to make big investments. I've spent my career studying, especially the Western energy companies, and it's an environment where we could wake up one day. I don't know if it's 2 years from now, 3, 5 years from now, where suddenly shale has really matured. Some of the big projects in Brazil and Guyana have come online, and then what comes next? That is an environment where the OPEC countries that currently have some spare capacity will be well positioned to take advantage of it. And again, from a geopolitical standpoint, that is where I think it's incumbent upon a US administration to think about what are the long-term things we have to do. So when we hear about deregulation and drill, baby, drill, there's too much emphasis put on the short term. I think there's very little an administration can do to kind of force companies to produce more. They're not going to. But there are things you can do around acreage leasing, about regulatory burden easing, about approving pipelines and export facilities that is in the purview of the federal government that can help the US and its allies prepare for a world long-term where oil and gas demand is continuing to grow, but where the short cycle stuff like shale has become quite mature. And that's the exact year is hard to pinpoint. It's not next year, though.
Yeah, it's certainly an uncertain period. I mean, you mentioned OPEC, and they've been sort of holding the fort, at least there on their corner, for 2, 3 years now, trying to support a floor under the price, which they clearly are very dependent on, a lot of the members there. Would you say, I mean, they've got another decision to make now, whether to proceed to add oil back into the market as early as, January, having delayed it a bit. Would you say that they're going to have to just hold off on that, given what you've just said as well, for another few months at least?
I think 2025 looks to be the trickiest year. We're between, again, a little bit of shale growth, but more production out of Brazil and Guyana and these countries that, at least in the near term, in a world where we have sluggish GDP growth below 3% global GDP growth, and therefore only around 1 million barrels a day of oil demand growth, that non-OPEC supply is probably at least as much, if not slightly in excess of. So it's not an environment where you say OPEC should be flooding the market. I think, will they go back to a price war, these kind of things? I mean, it's a very different environment than 10 years ago. The US may say drill, baby, drill, but shale growth is undoubtedly slowing, and the ability to get back to 1 million barrels a day of shale growth, I think those days are in the past. This does look to be maybe one of the last slugs of big non-OPEC supply years. And as you look forward to 2026, 27, 28, I think the non-OPEC outlook becomes much more benign from the perspective of OPEC. So it would seem like they would have some motivation to maybe not flood the market in 2025. I'd say the caveat to that would be we don't know how the geopolitics play out and how Trump himself might want different outcomes and so forth, what kind of deals can be struck. You probably have guests that are more in touch with the geopolitical maneuvering around that. I think That's the part we worry about. The core balances, it seems like OPEC is probably well positioned to continue to tough it out with holding back the spare capacity. Because again, you look at over 12 months beyond 2025, I think the outlook looks better for OPEC being able to bring supply back onto the market.
Yeah, so as long as their budgets can hold on a bit more, and those obviously making those sacrifices and cuts. Arjun, I mean, your background as well is it's not just sort of energy, but finance, capital markets, etc. And I mean, we spent the first half of this year in talking about energy, just talking about the Fed every single week. What's it doing with interest rates? Is it doing this? What's, finally their sort of plan played out, and they've kind of not so much in the headlines anymore, with inflation coming somewhat, some data of inflation coming under control. But from that point of view of money, the cost of money, and it's sort of stabilized where it is right now, how much is that playing into industry thinking in terms of future investment, in terms of the price of oil, in terms of what it could trigger for other commodities, which are, as a trend, sort of in a bearish mood?
I think when I look at the capital markets interest in especially oil and gas and energy and some of the new energies as well, I think moving out of this, the quote, climate crisis is all that matters, and that we have to urgently, moving out of that narrative is going to be good for capital formation for all of energy, by the way, both oil and gas, but also some of the new stuff, which to some degree had gotten overhyped on the idea that we're going to have a quick transition. And of course, the new energy sectors, they peaked essentially on Biden's inauguration day, and it's been a tough 4 years for that sector. I think both old and new energy, we're in a little bit of a bottoming phase, and I think there is a healthier recognition that we are especially short power, that there is significant power demand, and who can meet that? Is it going to be natural gas? Is it going to be nuclear? How much is going to be solar? Is wind bottoming or not? These are all, I'm going to call it, normal investment debates, and I think getting back to there is a desire for energy demand growth, certainly in the United States, but in the developing world, that's the healthiest thing that could happen to both old and new energy, in getting away from, I'm going to say, some of the narratives around we have to urgently transition only in the name of climate as being the driver. That was never sustainable. The world needs energy, and I think the world forgot that over the last 4 years. On the inflation point specifically, I probably do worry a little bit that the genie is not back in the bottle and may not be back in the bottle. There's certainly nothing about tariffs that are likely to be disinflationary. They're either inflationary or neutral at best. Some of the pressures around electricity prices in particular, I think we do worry that inflation, maybe it's not a very high rate of inflation, but we're not going to go back to the 2015 to 2020 near zero type inflation environment either. And that's going to be tricky for company and markets to navigate. It tends to all else equal favor commodity producers over non-commodity producers, but we shall see. It's certainly an economic headwind to have an inflationary environment.
Definitely. And I mean, on the ground, if you ask your average person, there's inflation in their basket, isn't it? I mean, but by any intent and purposes, one reason cited why Biden, didn't win the election is because, people are hurting on the ground. Arjun, before I let you go, I do want to address the climate change issue because, we were having weather phenomena that are, I mean, I'm not going to ask you which way you lean, I can probably tell. But there's no doubt we're having some really volatile weather phenomena in the world, flooding, tornadoes, etc. Something's going wrong with the climate. That's why there's a big camp proactively trying to sort of do something about it. COP29 was one such meeting. It's annual. We know what it's all about. It's a very difficult meeting, every country trying to come to an agreement. But there was a bit of a fallout, wasn't there, last weekend even, with again, the divide between the developing and developed countries not coming to an agreement on the funding of climate change finance, which the developed world is responsible for ultimately. They reached some kind of fudgy compromise in the end. Do you think the COP meetings are dated? Should we have something to replace them? What's next on the priority there to move things forward in the right direction?
I mean, thank you for asking this question because it gives me a chance to make sure I'm clear on our viewpoints. Is while we will prioritize everyone on Earth deserves to be energy rich, and there's about 1 billion of us, the lucky 1 billion that use a disproportionate amount of energy that live in rich countries, and there is a moral and necessary imperative to ensure the other 7 billion people on Earth have the same kind of opportunities we take for granted as I'm an American. And the question is, how do you address environmental and climate challenges, which are absolutely in need of being addressed. And I will say, societal wealth is positively correlated with clean air, clean water, and also dealing with adverse weather events that you're talking about. When you're richer as a country or as a society, you have a better chance to deal with those events. And I will absolutely acknowledge biodiversity and carbon emissions are inversely correlated with that same societal wealth. I'm going to use China as the example of how to marry both of these goals and what the driver is going to be. I don't believe it's going to be through counting CO2 that you address carbon emissions, which I know is the counter consensus view. It is going to be that imperative. We want to be rich as a society, but we don't want to be dependent on external sources of energy. So if you're a country like China and you're importing 12 million barrels a day, you are highly, highly motivated to figure out alternate new energies like electric vehicles, like LNG trucks, to displace crude oil imports, whether it's from Saudi and Russia, or for that matter, US shale or Canada. You're going to want to control your own domestic energy supply. And when I look at billion-person scale economies like China, like India, collectively the rest of Southeast Asia, I think they're going to be highly motivated to crack the code on new energies technologies. So this framework we've been in over the last 4 years, that we all need to count up our CO2 and have these Excel model downward declines that are completely unrealistic, I'm going to push back that that's been a good approach. What I will say, though, is if you're a country and you care about geopolitical security, which everyone does, and you care about ensuring that your citizens have the same kind of opportunities I take for granted as an American, you're going to be motivated to figure out what comes next. It's wrong to say we know all the technologies that can profitably scale today, but there is a whole bunch of capital and a whole bunch of motivation to affect that kind of change. And look at the success China's already had with electric vehicle ramps. Now LNG trucks to displace petroleum diesel is just 2 examples. Nuclear is going to play a role. Solar is going to ramp. How do you baseload that? Well, unfortunately, it's coal right now in some of these countries. If you care about climate, how do you motivate the displacement of coal? Maybe it's geothermal, maybe it's LNG, maybe it's nuclear, maybe it's cleaner forms of coal. It's probably beyond the scope of the remaining few minutes we have, but we advocate for new frameworks that prioritize making everyone rich, energy rich, that everyone deserves it. And in doing so, you will solve for geopolitical security and an abundance that de facto decarbonizes. No one's going to want to be dependent on just a handful of major oil producers, whether that's the US or countries in the Middle East or Russia. And I believe the world will be successful, maybe not by 2050, but in the coming decades towards cracking the code on new. And we are very optimistic on new energy technologies, but we do it from the perspective of what's going to get India to economically develop without using so much fossil fuels, as one example.
Arjun, Murti, partner at Veriten, thank you so much for joining us today on Halftime Talk. It's been great to have you.
It has been my pleasure. Thank you so much for having me.